Hi, everybody. Brian Hoops here with Midwest Market Solutions. This is our monthly webinar, and we are here on Friday afternoon, June the 29th. It's our quarterly stocks and acreage webinar, and I am joined by Merrill Crowley from our Watseka, Illinois office. And thanks, Merrill, for joining us. How are you doing today?
I'm fantastic. How are you, Brian?
I am doing great. Beautiful. If you like hot temperatures, this weekend's going to be very hot, and this is the summer, so expected to be hot. So I know we get a lot of questions from producers that maybe are in an area and they want to know how things are doing, in different parts of the country. You're in Illinois. How's the crops looking there?
Looking pretty good, really. I wouldn't say, I actually kind of would disagree to somewhat with what the crop ratings have been. I don't think they're quite as high as that. I don't think it makes that much of a difference, though, in the end game. But, yeah, our crops are looking good. You can see some fields now that got planted too wet, and you can see some beans that are having some disease problems. I don't see anything out there right now that says we're not going to have a great crop.
Yeah, exactly. I was talking with a lot of clients today, and they were talking about, the crop ratings and how things are different than a year ago. A lot in Iowa, a lot of the lawns were burning up, turning brown this time this year, and now they've had lots of rains in the month of June. So major change from 1 year ago. Crop ratings are higher, but there's always a different day, a different year, and we're getting close to the 4th of July time frame, and a lot of crop is going through pollination. Any corn going pollination in your area?
I haven't seen a tassel yet. I have to admit I haven't been very far this week. Now this weekend I'll get out and start driving again. Have a lot of flags up, corn flags up, ready for the tassel to pop. So I expect it soon.
All right, well, let's get into this report in here. And if you haven't joined us for prior reports, thanks for joining us. We have 12 licensed brokers, 10 different offices all over the Midwest. Merrill's in our Watseka, Illinois office there. We clear through R.J. O'Brien, and we have a wealth of experience in corn, soybeans, wheat production, and hedging strategies, as well as livestock and full service brokerage can take care of any of your needs. So contact any of our offices there. I know they'd be glad to assist you. A lot of our services available include newsletters, and not only this webinar series, but also daily video market commentaries, and as well as our brokerage services and text marketing service, Twitter feed. I know, Merrill, you have a Twitter account, and do you want to give that out so people can follow you on Twitter?
Yeah, it's Price Help on the Twitter feed. So if you look for @Price Help or Merrill Crowley, you'll find me there.
Excellent. And you can follow our company website, or Twitter feed, at Midwest Markets, and our website is MidwestMarketSolutions.com. Okay, looking at some of the numbers here, this is the grain stocks, and there's two parts to this report. Not only grain stocks, but also planted acreage. We're going to talk about that in a second here. But, thing that kind of jumps out is compared to our average guess, we are right in line with soybeans, what the trade was thinking, but corn ending stocks much larger than what the trade had expected. Wheat ending stocks a little bit larger than what the trade had expected. And something else that jumps out is, in the case of corn and soybeans, compared to last year, our stocks are much larger, and the wheat stocks are just a little bit smaller. So, this quarterly stocks number will get moved over to a little bit larger carry-in numbers as we go into the July supply and demand report. And any quick thoughts on this, Merrill?
Well, since we had the March quarterly stocks report, there was the group that was thinking that they may have underestimated the U.S. crop last year, even though we had such a large and a record yield. So I think with what we're seeing now, and if you factor in the amount of livestock we're feeding, and I'm talking all three areas, the poultry, the cattle, the hogs, we're not seeing any feed use coming off this report to justify the extra animals we have. And that still leads me to believe that maybe our crop was a little bigger last year. That's going to end up having some ramifications when we look forward to what kind of yield we might be seeing this year. On the soybean side of it, I think that just simply reflects the fact that we're not seeing China come to the table to get beans right now. And wheat, I don't know what you say about wheat. Even at 1.1 billion, it's just a lot of wheat to handle.
Yeah, it surely is. You're going to have rallies sustained. You're going to have to come from supply threatening rallies because we have just too much supply out there overall. The other equation or part of the equation today in the report was USDA acreage numbers, and there's some key ones to look at in here. Of course, we usually like to focus on corn and soybeans, and these numbers, I think this was maybe you know off the top of your head, first time soybean acres has eclipsed corn acres in how many years, Merrill? Do you know?
You got to go back, what, 80, 85, somewhere in there?
Somewhere like that. It's been a long time since we've had more soybean acres than corn. Happened today from what the USDA said, and if you go back to the March numbers from the government, this corn acre is about 1.1 million more acres of corn, and for soybeans, around 600,000 increase over the soybeans from March. And the USDA did say a lot of it is coming from prevented planting, not being as large as what they expected, and what's the impact going forward for the markets and for producers, Merrill, because of these acreage changes?
Well, with your corn, you're going to expect to see a little more supply. It's still going to get down to what kind of yields we have. If you're going to have great yields, the actual planted numbers are minute, but I guess the corn showed about the biggest surprise, 530,000 more than what the trade was expecting on average. And as you can see from the range, it still wasn't above that, but it was toward the high end. And I think the biggest surprise of the corn plantings was in Kansas, that planted about 300,000 of that more. And I had read a brief article about 2 or 3 weeks ago, and it was stating that that's what Kansas farmers were doing. They either leaving the abandoned winter wheat acres alone, or they were putting in corn to replace it. And if you recall, early on in March, we were talking about putting in cotton and soybeans in place of the abandoned wheat.
You bet. And the other number that really jumps out to me here is the spring wheat number, 13.2 million. The trade was looking for a reduction from March. You can see March in here is 12.6. So we actually increased by 600,000 acres, and it was above the trade guess. Trade was looking for like 2.5 million less, 2.2 million less than March. And so big surprise to the trade. Minneapolis wheat ended fractionally lower today, despite the other wheat classes sharply higher. And I think that was one of the more shocking things, was that spring wheat number being below or above trade expectations and well above what they said back in March.
Well, don't you think some of that was some of the abandoned acres from winter wheat? And I'm not necessarily talking Kansas, but I'm just talking in the wheat belt in general. I remember in March, many people talking about they wanted to stay with the wheat in the rotation.
I think that's exactly where it came from. I haven't had time to look at all the state-by-state breakdowns, but certainly a lot of it was going to be abandoned and probably placed into spring wheat, or certainly into some other crops like corn and soybeans. You mentioned the state of Texas. Kansas. I'm sorry, state of Kansas increasing their corn acres. All right, we're going to move to the next slide here. We're going to look specifically at the balance sheet for corn. I'm going to go through these numbers. Merrill, I want to get your thoughts on what this means for producers. Corn ended at about 371, nearly 5 cents higher in the day, but these are the new acreage numbers given today from the USDA. So it does change our balance sheet slightly. 1.765 billion bushels of carryout, that will be projected next summer. And the USDA, or this number right now, USDA is using 174 as far as our yield. So what are your thoughts on this graph here? Is that an accurate number for our ending stocks? And if it is, what does that mean for our producers?
Well, I don't think you're going to see much in your price increase. We really didn't get any information. I think first we got a sigh of relief because it wasn't negative. Then we got kind of a rebound, but as soybeans went back and got lower, so I'm getting off soybeans. Corn is saying, yeah, we needed the rebound. We feel comfortable with the rebound, but if we don't get a supply problem, I don't see what's here to keep that anywhere below the 1.765 that we're now projecting. So on rebounds, I think it's going to be very important to be aggressive and get stuff sold. A lot will depend on our warm weather coming up and whether or not that ridge retrogrades back west, which is what some guys are thinking, other guys are not thinking that. So if it retrogrades back west, our temperatures cool off and we have a great finish to our year.
Because, right now, a lot of the crop is starting to pollinate. Missouri's crop's pollinating. Southern Iowa that I've been at is in pollination. They're going to go through this really without much stress, a lot of moisture. There's some areas, northern Iowa where it's been extremely wet that the crop is behind. So they would take some warmer temperatures, at least for a near term, to try and dry some of the fields out. And with the high humidity levels, it's just kind of like a greenhouse with a lot of heat and a lot of moisture in the air.
One thing I've been watching is the nighttime temperatures as we go through this. As we all know, if we can't get those nighttime temperatures below 70 degrees, we're going to have a problem. So, yes, you're right about the high moisture being a benefit, but it also can work as a curse. It's a benefit as it keeps the temperatures down because of the higher moisture, but it also tends to retain temperatures, not letting them get below or into new normal nighttime lows. So it's going to be important as we go forward to watch the nighttime temps.
So from a producer standpoint, corn's sitting at 370. If this, I've heard people talking 180 yield, and that pushes our ending stocks back above 2 billion bushels. I guess my thought on this report, I don't see anything bullish whatsoever out of this report. Increasing stocks, increasing the carryout, increasing yield. And then if you want to change that yield forecast a little bit, things get a little bit more dire. What's producers at this point? We're trading 370 corn. What's our downside risk going into harvest, do you feel?
Well, the first thought is the lows we had around 330 or lower last fall, and you might even work even lower. It's just going to depend on how short the funds want to get. When you're talking about that yield, if we just match last year's, you're going to add about 2.6 bushel per acre, which will really change the almost 180 million more bushels onto the ending stocks. But what if, like I think with these stocks, I think that's not reflecting as much usage as we have animals. That would suggest that last year's yield was even higher. So yeah, you're talking that it could get up to 180. It's very possible.
Okay, well, I know you follow technicals real closely. 330 our low last year. We had ending stocks at around 2.4 or 2.6, somewhere in that range. So maybe we've got 30, 40 cents of downside risk here in this corn market, and we will certainly be dependent upon weather and fund positioning going forward. But yeah, it's a great something to watch for producers. Not a great place to make sales, but there is possible 40 cents of downside risk, and rallies meant to be sold yet. Shifting over
and I think big options. You got to use options if you're going to do something.
What type of options?
I'd hate to lock in a price here and see a weather problem come up.
So what strategies are you referring that producers should use?
I would rather use options here and try to get something sold. Now you can do a bear put spread where you buy the nearby and sell the farther out with like something lower than the 30 cents if it's feasible. I don't really like selling the calls at this point yet, but with what we know about production and everything so far, it'd be a lot less risk than it was, say, a month ago.
So you would want to retain ownership of the cash and just use option strategies to manage some of the risk here?
I would think so at this point, because it just seems like we are awfully low. Now, it doesn't mean we can't go lower, and I think you're absolutely right about 20 to 30 cents more downside.
Okay. All right. Good ideas there, Merrill. And producers have any questions on specific strategy, you can reach out to Merrill. He's in our Watseka, Illinois office, and his phone number is on our website. We're going to look at the soybean market here. Again, this is similar to the previous chart where new acreage numbers coming in here, increase of 600,000, and carryout is around this 4.15 billion bushels for soybeans. What takeaway from this, Merrill? We had a kind of a bearish close today, down 4 cents, new low close, outside day lower once again, closing below 880. What's your feeling on the downside here for the soybean market?
Well, again, you look at your yield. If you're going to have bumper yields, you're going to go up to 52 on the yield. that's going to increase your ending stocks. And I guess the issue I've had all along, they're talking about 225 million more in exports to take our number originally down to the 302 or the 385 they had before on ending stocks. So you take that 200 and put it back in, which I don't know how you're going to achieve that if we're still having tariff wars. You're looking at that figure getting up to 600.
Yeah, that could be a real problem. Last year, I just highlighted it now. Last year at this time, they were talking about 2 billion bushels of exports, and now you're looking at 2.29 billion bushels, except we are in a trade war. So unless you get an agreement reached, it's going to be hard to reach even last year's pace, let alone increase it to 2.2 billion bushels of corn or soybean ending exports and give us that carryover number. So yeah, fundamentally nothing real bullish in this report that I could see for soybeans. Slight increase in quarterly stocks, increase in acres. You've got expectations we're going to improve our export forecast, but that certainly remains to be seen. And technically, where did we trade at last year to the downside, Merrill?
Well, you got to go back 2 years to be in the same point to where we are now, and that was around, I think, pretty close to the 860 mark, or maybe 850 something. I can't remember the number right offhand, but it's you got to go back to 2 year lows in order to find the low for the soybeans that gives you any idea where your support is here. I don't want to see the beans go below that 860 that we got in place right now, and so that's suggesting at least about 20 cents more risk to the downside. And your point about, okay, what if they do get the tariff situation solved, or what if the USDA comes out and says, okay, we're going to buy crop to get you farmers back into a good situation? I think it just accentuates the point that if I do any selling now, I want it to be something that's flexible, something I can either get out of or allows me to take advantage of higher prices.
Okay, very good. Do you have any option strategies producers should use like you did with the corn market?
Well, I was kind of reluctant to get out of the shorts that we had. And I don't know, you look at this and it's easy to argue that we shouldn't have much more downside risk with 2 year lows in place. But this is something new. And unfortunately, I don't have the experience. I don't know if anybody really has the experience in dealing with tariffs. So we got a good crop. That's part of the reason we're down here. And the tariffs are the other reason.
Right.
So no, I don't really have anything in particular buying puts with like a bear put spread or selling calls and buying puts.
Right, and certainly beans could have a huge amount of upside potential in here if we get the right situation. But it may be a long drawn out affair before there is an agreement reached between the United States and China. So
exactly.
All right, well, that's going to wrap it up for our webinar here, looking at the quarterly stocks acreage report. Again, not a real positive report, and flat outright bearish in some cases, especially for that spring wheat belt. So if you have any questions, contact Merrill, myself, or any of our offices. We'd be glad to talk with you. Hope you enjoyed this and it helps you out with your trading. We will be in touch. Thank you for listening. Brian Hoops and Merrill Crowley once again signing off.